Okay, good morning, guys. G'day, Paul. Just let me know if you can hear me loud and clear. And we'll get up and running. All good, fantastic. All right, bit of a bounce overnight. US pretty much just drove higher from probably the European Open. It was grinding higher. We can see our action, that's our day's action, just popped up into the close. So that was interesting. You know, we gapped down. This is on the SPY, by the way. Actually, get the ASX. Smacked out on the open, and then that was the lows for the day. We did drift lower to retest that zone into the close, 5-minute chart, into the close here, and then boom, straight back up. And that looks like that sort of rally into the close is due to the stronger European session opening, or looking like it was going to open stronger. So yeah, a bit of a chop fest at the moment. My biggest concern is it's just there's no real substance to anything just at the moment. You know, they don't want to sell it, but they don't want to make a deal. We're talking about China and the US. It's the banter back and forward that's just going to kill the market and just drive volatility up, I'd say. And it's going to annoy people. You know, anyone that's sort of long up here, closed it here, and then or sort of got long around here, got closed around here, and then sort of bounce again. They could have been up, you know, that sort of thing. The volatility is going to drive people mental because they'll be trying to pick bottoms all the time or pick tops, get washed out because there's a bigger squeeze, all that sort of thing. And I think there's going to be less emphasis from the market on what they're saying. And I think, well, my theory is anyway, it's going to annoy people. I mean, Trump will, and even China, when they come out yesterday, I think when we were doing the live stream yesterday, wasn't it? After 12:30, they come out and said they want to do something to stop the rot. Basically, they want to come to terms, but then Trump is obviously outspoken that during the US session, saying they want to make a deal with us. Da 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 da. We're going to talk. We've been talking on the phone on Sunday. I don't know if anyone read that. They're saying he was on the phone to China on Sunday looking to get the meeting started. And then China come out in the news there saying, we didn't talk to him. So there's these real mix of messages coming out. And the more news, who knows what's real at the moment. So that's not going to tame the volatility. And that's not going to support the downside if there's no cohesion between the two and there's no true, I guess, attempt to try to get this trade deal sorted. What it does do is, you know, we get these smackdowns on the market, bounce back up. And if we go and look at gold, this is the ASX. So this is a 30-minute chart on the SPY. Knocked down on Friday, gaps down on the open, and then rallies back up. Trades, you know, sort of probably about a 50% retracement, that move down. And then potentially we can get some heat again because people will decipher what's happened, decipher the action, saying, well, they're not actually doing anything, just like what's happened the past year. No one's actually doing anything. They say they're going to do something. They say they're in a meeting and then come out and lo and behold, Trump's talking about it, raising tariffs again, and then saying they're really good friends. We're in a meeting. Things are looking great. Oh, hang on a sec. I'm going to raise taxes again, raise tariffs again. So it's just what they're saying and what they're doing is just complete, I think, at odds at the moment. And it's really mixed messages coming out. And it's really, of course, yeah, you get something good, bang, the market will squeeze on the shorts. And all those shorts that potentially are built up are getting squeezed out because they think something's happening. And also, too, you don't want to hold a position knowing that the market can get really violently move against you. And that's what happened last night. I think the Dow bounced back more than what we expected, or what I expected anyway. I was watching a bit last night. Let me just get that up. Wrong one. Here we are. So this is the Dow. I mean, that sort of retracement there, that was quite savage, this move. What was that? 25.5 up to, that's nearly a 450 point move, 450 rally. That's quite hefty. And you got anyone that's sort of bearish through here and then bearish into the support, bearish probably here is getting squeezed out. And, you know, if you're trying to pick a top, that's okay, it's rallied back a bit. You know, that's probably an equal move up about here, going short, bang, squeezed out, going short again, squeezed out. So there would have been a lot of people squeezed out if they were trying to short into that market. Also, a lot of these shorts are getting squeezed out because that was quite a savage move down, 600 and something points. Well, look at that high, 26.29 down to 25.3. God, is that nearly 3,000 points on that move? So that's pretty hefty, isn't it? Into the lows as well. So I think they gapped down a few hundred points. Was that close at 25,688 down to roughly, say, 688, yeah, about 300 point gap down. So you add to a 600 point drop, 6 to 700 point drop, another 300 point gap down in early hours in the morning, and we were talking about this level, bit of a wash just to see how it could react back up. Of course, it reacted back up, built that higher low, and then off she went. And if you were looking at it at that stage, look, it would have been a bit ballsy, to be honest, to buy. We're looking at that, we see that one candle, and if you drilled it down, it'd be a bit different. You probably get better, I guess, more detail into that going long there, but that rejection on that candle there and buying on the break of that candle on the upside with your stop below, potentially, you could have got a good handy trade. It's all in hindsight, but we knew that that was pretty much a key support zone where if it reacts off there, you're probably looking for a squeeze. And the whole idea behind a trade going long would have been a squeeze on these shorts, and knowing that there would have been a lot of bargain hunting out there and people just trying to pick a bottom. I mean, maybe it hasn't worked. It didn't work this time. If you were trying to buy it in here, it didn't work. Bang, squeeze back out. Could have worked in here. Could have worked a few times all the way up here. And then anyone that's sort of buying, expecting that to break through, then getting squeezed out in the opposite direction because you've got all this fuel on the way up. So yeah, this market, what we're looking at, say on the Dow, I mean, the Dow's the key thing. The US, we'll look at Germany too, is potentially being capped at that 25,960, and that would be a key lower high, which is not looking very good. You know, we've got a big move down. You've got this consolidation right through since about that low at, was that 25 even, say, 25,000. That low, pressure in the market, bought back up again at this zone at 26.4. More pressure which drove the market down, what we saw on Friday night. The market has bounced at you know, these previous low. There was a reaction there, but that, don't forget, it is a 600 point move off the high. You know, move lower off the high, and you're probably going to get, even if you're bearish, you know, you're bearish longer term, you're probably going to take something off the table there, especially if it reacts, if you get this lower high. Okay, just get out, reassess, knowing that there could be a bounce and knowing the volatility is going to drag prices probably back up again. So what we've got is a scenario going from oversold back into overbought. Now, last time it was overbought over here, we're right up towards 26.4. So that's showing to me, just reading that, we're overbought up here, gone to oversold. Next time we're going to overbought, we're lower. We're, what is that, 400 to 500 points off those highs. And that probably is it. I don't know. Just eyeballing that, it's probably over 50% retracement from that low. You know, reversion back to the mean, back to the MAs. We're consolidating around the MAs. So for me, really the two key levels, if we can hold a minor higher low here, the two things I'll be looking at to be either bullish or bearish in the US, which leads on to our market as well, continuous, would be something like this to be a bull, you know, some higher lows holding, and then a spike through that high, probably a pullback, and then off we go. I think we could be heading back up towards those highs. Otherwise, don't forgetting it is sort of hovering in that overbought. That would be a big effort, I think, but nothing's off the cards in a volatile market and more of a fear-driven market than anything else. You either fear of missing out, thinking we have putting the lows down here and we're putting in a higher low here, or the fear of, I guess, holding a position that's going against you and the market driving down. So if this is a key, if this level holds at 25,960, I would expect more, maybe a chop around here, and then the pressure starting to come in. And then potentially you got this inside lower high here, and that will confirm a breakdown below that 25,765 will confirm a major lower high. And I would expect longer term to be driving down through that, because that will confirm, once you break down here, you're confirming this is potentially a swing top. And then if that's a swing top, you can extrapolate that as being a key lower high, you know, in this overall structure. Down, up, consolidate, confirm that high, confirm a lower high, pressure's coming in. That pressure coming in with a lower high there would, to me, lead me to believe it's going to break straight through that support, potentially straight through 25,000 as well. And we've got a serious correction on our hands. So I think we're sort of in that zone where, you know, anything can happen, really. If you're trading the Dow, I wouldn't buy here, I wouldn't sell here. I want some confirmation that we're going to get this high low holding above 25,765 or a lower high holding. I mean, high low, I'll be looking for longs. This sort of action, I'll be looking for longs, pullback longs, or shorts, pullback shorts. Shorting into that weakness that's starting to develop in the theory that this overall structure is still very weak, and I still think it's very tentative. So the US, you got that same sort of scenario. high here, low through here. If this low doesn't hold, I'd expect it to go down. If the high can hold, and we can sort of consolidate, because this can come off. Don't forget, stochastics is not the be all and end all. It's showing me the strength in the move. This strength in the move up, good buying pressure, because the buyers drove it from oversold to overbought, but they can't drive the price up, which means the seller's still standing in the way, holding it down, willing to hold it down, or there's not enough pressure from the buy side, not enough volume to really drive it higher. And that move up on the US last night was it lacked volume. So if you're bullish, be careful, because the US didn't get, if it's heavy volume on that bounce overnight in the stock market, not the futures, but the stock market in the US, then that heavy volume is associated with a lot of people buying, bigger players buying, which would be supportive of the market, but it wasn't. So that's why I'm still a bit, I'll be bearish still until some major price action plays out, whether I want to really go load up on the long side or make sure, or even load up on some shorts, get some good shorts on. DAX, same sort of scenario. We've got this area now where I feel that anything can happen. I mean, we could drive up. We could probably, the DAX looks like it's inclined to wash out that high and then drive lower. Potentially, it is getting overbought. But if this stochastics, I mean, like I was probably saying back here, that stochastics drives down, even to 50% or so, or towards sort of the low end of the scale, the price doesn't really move. It's starting to hold. Then that could easily drive back up and squeeze out, because what it would be doing, you'd be building up shorts here, building up shorts, building up shorts. When they realize they've got it wrong, they're going to have to exit. That them exiting it with a lot of more longs coming into the market would drive that price back up. So at the moment, it's early stages for me just on these overnight markets. They've just opened up, so I didn't realize, I forgot all about it. They were closed on the FTSE last night. I couldn't figure out why this wasn't bouncing like everything else. Took me about a day to figure that out. So I'm onto it, on the ball there. So I forget, I'm not really worried about the FTSE at the moment. Now gold has broken a key level up through the previous highs at 1534. It's come back to bounce off this support level, or this inside level at 1524. It seems to be holding. Now, if that holds, and that's sort of the reverse, you got the oversold. It's holding at a higher level. Oversold last time was coming off this support zone. So you can see if that level holds it oversold, if I can say it, and that you can see that acceleration higher, that's, people are bullish. They're not bearish, they're bullish still. Instead, we've got this bit of a drop here, which is fine, but then it got soaked up again earlier on, and soaked up around the MAs too. So there's a lot to me sort of saying that we could start to build, like we did here, build here, then rally, and that would probably coincide with a drop on the index, overnight. Aussie too, look at that savage move down and then bounce straight back up. So they're linked to obviously what's happening in China. So that was on the back of bounce back up, and this is what, there's a lot to be said about levels, key levels. There's really, when the market is pressed down on the Aussie, that was the close on Saturday morning. It opened lower, but when it opened lower, there wasn't really too much in its way. It was opening down on sort of these zones, but it's not a key support. And a lot of the time what they'll do is extend and test a key level and really extend into that low like it did. And then obviously, if you could have been quick enough to buy in there, or you got a setup off there, would have been great. The way it's rebounded, but you can see how they really drive down. Once it gets through one level, it's searching for another level where it's trying to find liquidity. It's not, and if you're a buyer, why would you buy in the middle of this range, having a 60-point stop below this support? Why would you do that? You'd just be buying, trying to see what happens when it gets down there. So the lack of liquidity between those zones, you can see that in the price movement, just drives straight down. And then you got this liquidity, it's ready to come in, ready to buy off that support. Sometimes it doesn't. Sometimes it's really, you can see the way it comes off support. There's more liquidity on the sell side. So you have to be, I'm just trying to find an example. So the way it drove back in here, it's bounced, it was choppy. So there was still some sell volume, but then the bulls started winning out. It had that press back up. So try to think of it in terms of liquidity at zones. And if it goes through here, anyone that's bought it off here, that's been holding for all this time, is going to come under pressure. So what it's trying to do is the market's trying to put different zones or different areas under pressure, which is buyers and sellers, put them under pressure, see what happens, and see where it can go to, and see what sort of reaction. So as soon as it realizes, the market realizes that it's driving back up off that zone, then you got buyers diving in, any sellers probably pulling back, holding off, and just to see what happens. And of course, it was helped along the way by those comments out of China, which drove it higher. and we're just, you know, Australia's or the Aussie dollar is really linked to trade with China. If it looks like the potential is that there could be something brewing, a deal brewing, then the Aussie's probably going to benefit. Whereas, you know, when the market tipped over, the Aussie was grinding lower, but not as much as say, oh, sorry, um, euro, pound, you know, all taking off because the US dollar's going low. But as soon as there's talk of really problems between China and the US, we'll go lower as well, along with the US dollar. So we're not getting buoyed. So yeah, that's the Aussie. So we'll just kick over again. We'll finish off with just where the market's opening. Just to be certain, I don't think anything much happened. It's got a 5-minute chart between the close and the open. So we're looking to open up about 20 points on the ASX200. Just nearly finished opening now. 950 Wall Street, where'd they close? Actually, it dropped a bit, didn't it? So it's opened up about here. So it's dropped 930. It's about a 40-point drop after hours. So you can see that the market's pushed up into the close of the stock market session. After hours, the futures, which is driving the CFD, is dropped about 40 points. So if you sort of factor that in to our market, we might not open up 20. We might be opening up 10, 15. Instead, it's about 15 here at the moment. So we're probably a couple of minutes, we're finished opening up about 15 rather than you would have expected up towards 20 to 25 points. Still, you know, relatively positive open. We'll see what plays out. And the SPY, let's just see what the SPY, if it's telling us anything as well. No, I keep getting the wrong chart. Just 1 minute. There we go. So it's starting to still, that SPY is looking a tad heavy. So you'd expect, obviously, the ASX, it's opened up because of what's happened overnight. But if we get any sort of negative action on the Dow, or, you know, China open up and getting a bit negative as well, overnight markets, well, the European overnight markets and the US overnight markets get a bit negative, that's probably going to drive the SPY down, and then you start to look towards those lows at 63, 61. Full hell breaks loose, looking towards 63. So yeah, it's going to be interesting to see how this goes, how this plays out during the day. I think our market really, you know, we're so linked to the US, it's hard to say, it's hard to find some trade. It's been choppy intraday, and the moves have been happening overnight, which, you know, if you intraday trade during the day, it's hard to trade. So if you are trading on the SPY intraday, just be careful and look for, you know, keep an eye on the news, keep one eye on the news and one eye on the patterns. So yeah, market's driving a bit lower. If it takes out that low at 63.85, it's only at 15 points away. That'd be back to break even on the ASX. Then yeah, I'm looking at this market being a bit more negative than what you expect today. All right, let's just take a look. ASX, we're up 6 points, so not very good. So that's, you can see how it's closed, it's finished opening up 10 points, 6 points. So that's probably because the Dow's fallen over after the close. So people are still tentative in this market. There's still a lot of reason to be concerned. I mean, who's to know if Trump comes out later and says, you know, he just got this habit of trying to look good in front of, obviously, he's trying to get the votes, in my opinion. Anyway, all he's worried about, and he doesn't want this stock market to drop like a stone. So he'll come out, and if it looks like, for China come out, they did say what they said. He's obviously spruiking that. So, oh, look, China want to make a deal with me, but he's just as much wanting to make a deal as anyone else. And they are under pressure because the more the tariffs kick off, the more it's going to cost consumers, and the worse he looks. So it's kind of interesting anyway. Let's just take a look at some of those stocks you're talking about. Oh God, that's good. Wouldn't buy that up here, but yeah, be more inclined to see if you can sell into that intraday. What's happening there? Good presentation, is it? What's it say? Full year results. They've obviously had some good results, and they're trying to push it on the back of the presentations, trying to spruik it a bit. That's looking good. What's the others? Gin, looking okay. That's a nice one. What's that? City Chic. Chic, is it? Chic or chic? They're looking good. So we've taken profit on PMV. Hopefully, where did it open? Oh, beautiful. So we've just taken a partial on at basically 183.5. I'll give you that. If you didn't see the alert after hours yesterday, sorry, it was coming into the match yesterday. So I sent an alert if we can match above 82, take a partial, but we didn't. We matched at 81 or so, and we actually triggered. You know, if you're still held, if you didn't see the alert, you got out at 185. If you did see the alert, then you probably got out on the open at 183.5, which is good. Locked away some gains there. SM the short looking good too. I'm ready for that to get crucified. There's just no liquidity there. Just be wary of this one too. If you are short with us on SM1, Synlait Milk, there's not a lot of liquidity out there, and it is getting chopped around. So they'll match it up 10 cents with 10 shares. It's ridiculous. But I think they're waiting for news. So it might be worth, we might look to just see if we can chip out a partial on that as well and just lock away. Because the last thing you want to do is see that we're short this one. It's looking great. Maybe coming to that support at 850, we take something off just to be on the safe side. Because if this thing turns, bang, it could race straight back up and gap up. They might come out with some good news. I think their report's due out soon. If it hasn't already, I've got to check that. G'day, Sam. How are you, mate? That's probably about it, guys. I think that's all we look. The market's back to neutral. So, like I said, just be careful. Don't get too bullish because we've had one night up in the US. You know, we did rally 300 points, but in the scheme of things, when you drop 600 to 700, that's not much. You know, that sort of, if 300 points traditionally was a pretty big move, but we're not in those kind of conditions anymore. We're in really volatile conditions. So I think prudence is the best thing. Let's just see what gold's doing today, actually, the gold sector. Where are we? Gold, there we go. So they're taking, look at that. So even gold, people are getting tentative on gold stocks. You know, up strong yesterday, but now they're giving up down 3%. So there's some volatility coming into there. There's people willing to take some off the table. You know, so the rallies for people to come back into gold, the rally's going to be $30. You know, it didn't really move. Gold didn't really move last night. And look what the stock market's doing. You know, everyone, and it's harsh to say, but retail opens the market and pros finish the market. It's simple as that. And that's been a saying in the markets for years. And so you look at the retail, they've seen gold go flat, they've seen equities open up, but not taking into account the bigger scheme of things, and the market's down. You know, some of these stocks are dropping 3 or 4%, which is pretty getting hit, pretty hefty. Probably on the back of news, but even some of these DCN, SAR, well, that's down. Oz Minerals is actually up slightly. Newcrest down nearly 2%. You know, so just be wary out there. Yeah, they're under pressure, so which is kind of unusual considering I would have thought the fact that gold didn't drop 10 or $20 last night is a good sign for gold miners. I don't know what Aussie gold did, but yeah, gold was up. Aussie, actually, just take a quick look. I just want to see what Aussie gold is. Where am I? Aussie gold. Yes, that's it's pretty much in line with what physical gold's doing anyway. So yeah, let's see how we go today, guys. Good luck with the day, and hopefully I can come in and speak to you tomorrow again. Cheers, guys. Bye.